Good evening, everyone, and thanks for tuning into the new and improved. Let me actually pull up YouTube here. We can still do the music. Let's get some lo-fi tunes in the background. The new and rebranded, no longer Crypto Stackers live stream, the Sistine Research live stream. And let's pull everything up. We are good to go. Yeah, so the the old brand, we have a little bit of sunk cost on our intro video. That's okay though. We'll continue to move forward. I'll get a new intro video ready soon. This is the first day of the rebrand. Let's actually get that down a little bit. All right. Let's take a peek at the market today. QNT bouncing back quite a bit, actually. Look at that QNT explosion. That looks like a little bit of an ascending triangle. We always like to keep an eye out for those. This is very promising. The amount of, I was going to say the amount of volume, but we really can't tell. It looks like a lot of volume piling into QNT here. And yeah, pretty decent amount of volume. Let's swing out to the daily. So far in the daily, nothing too crazy, but again, the day just started at, I believe, 8 p.m. I believe these candles shift over at 8 p.m. Eastern time. So very, very exciting for QNT. All right. Drop a like on your way in if you enjoy the stream. It's actually been a couple nights since we've live streamed. Let's take a peek at QNT. We'll get our trade levels. And it does look like QNT really going to take a move here off of the bottom. Starting to get a bid. Let's actually go from our previous low. And actually running into the resistance right here at 113.50. So we're going to put that in our Monday notes. And these will be made available in the Discord. I'll go over the new product offerings for Sistine Research in just a moment. As people join the stream. 113.50 is going to be our resistance level. So you could actually take a peek at maybe shorting QNT here if you don't think it can get through these levels. It has since found support at 96.60 off of its initial decline from the FTX collapse. 113.50 acted as support. Now it's acting as resistance. All right. So let's move our levels up a notch. Take another peek. Yeah, let's go for a more recent level. Something that people after the FTX collapse. Oh, yeah. So we got a little bit of double confluence there. This is going to be a tough level to get through. So we actually have moved, and I like the look. These candles look very bullish. This price action looks very bullish. The problem is we are smacking right into this resistance at 113, right? We've held this resistance level in the past, and off of this resistance level, we've now developed highs and lows that reaffirm this resistance with these margin pressure levels. All right, so 113.50 is going to be tough to get through. What we want to actually look for is a breakthrough and a hold as support, and that would be a long trigger. That'd be a long trigger. Now, if we were to zoom in onto the hourly like we were when we first pulled up this chart, we did have what appeared to be a little bit of an ascending triangle, and we've actually got quite a few ascending triangles building in the market here. Ethereum kind of breaking out of its own ascending triangle very recently here, so we'll take a peek at that in just a moment. On the daily, let's see here. We've got a little bit of a head and shoulders peaking upwards. However, we know that with QNT, the pattern that we are watching for, right? We're either going to look to go lower if we fail here at 113, right? And it is outperforming the rest of the market. So we're getting a decent little push here on a back-to-back days, kind of outperforming the market while the market's been down. If QNT can get a solid push here, we are looking for this pattern of an accumulation cylinder to play out. And again, what we need to actually see for confirmation of that to even be in play would be for us to blast through 134, 135. And that would actually be my trigger to get in. Now, could you have accumulated down here below $100? Sure. Our accumulation levels that we found with our easy bands have not been hit yet, right? So we're a little bit more conservative here. Let's say we get a retest of the 21-week simple moving average. We get rejected. We fall below the trend line of this accumulation cylinder. We want to look for an accumulation between around $60 and $80, and that would be our accumulation level for a solid S tier project in QNT, at least what I believe to be an S tier project. All right, let's talk about the opposite. The opposite scenario is we go up from here. The opposite scenario is we break through, and this turns into an accumulation cylinder, or Livermore's speculative pattern, as it's known, and we see it play out time and time again. That would really start pushing these red easy bands up. And we'd probably want to start taking profits in this zone of around anywhere over $200 as we near this resistance. But if we were to take that level out, we would expect a really, really big push up into around $400. So am I saying that QNT is moving to $400? No, I am not saying it's going to $400. What I'm saying is if we see this accumulation cylinder pan out, and we start taking out 130 to 135, and we really start pushing up with some volume here, and people start aping back into QNT, like we've already seen, right? Like we've already seen this market, this bear market. We could potentially have a really large move on our hands, and maybe even go up to retest all-time highs. Again, the trigger we want to wait for to actually see that happen would be a breakthrough of around the 130 to 140 region. Right. Otherwise, this is actually looking decently bearish with our head and shoulders, right? Starting to turn back up, maybe get a retest of our 21-week simple moving average, right? But overall, probably going to break down if we can't break through the 21-week simple moving average and that 134 level. So those are our key levels. So let's, and we've been keeping track of these for quite some time. So yes, we did change the name. I'll catch up with the chat here in just a moment. Change the name of the channel from Crypto Stackers to Sistine Research. What does Sistine mean? It's like the Sistine Chapel. So under the strictest definition, it is like of or relating to one of the popes that the Sistine Chapel was named after. But it's just, I like it. I think it's catchy. Kind of reminds me of the Sistine Chapel. So, Sistine Chapel is the home of beautiful masterpieces of art, including the Sistine ceiling. I have a dog hair in my mouth. Yuck. So Sistine Research would be masterpieces of research is kind of what we're going for here. Accumulation. Watch the accumulation cylinder. Watch the accumulation cylinder break out above 135. It is very bullish. Otherwise, head and shoulders could take us down to accumulation targets. I want to write these out a little bit more, at least tonight, to get us back on track after we missed 2 nights for the Christmas holidays. I hope everyone did have a great Christmas holiday. And just one other thing to note before we move on here. A rejected, like a failed head and shoulders, is also extraordinarily bullish. So you get a head and shoulders and the market just says nope. That's also very bullish. So you can usually rip off of those. All right, overall the market's looking a little bit down overall, but was actually looking pretty decent up until the candles turned over day over day. Ethereum has just been like, there's been no volatility, no volume. Ethereum has paused for the holidays here. Seriously, I mean, the range that we've been in, we've been creeping upwards since we kind of crashed when the S&P 500 kind of spilled off down 1150 up to a range, a 7.65% range over the last 16 days, which is quite small. And really most of that range has just been a 2 to 3% range over the last few days, with a couple of little spill downs on the short term that have actually gotten bought up rather quickly. So what we've kind of seen developing here, and this isn't necessarily a textbook. I would not call this a textbook ascending triangle, but it is still very very present. And depending on how you draw it, we could have already seen this play out. Or we could be towards the terminal point of this ascending triangle, depending on how you draw it, if you're willing to cut out that data. If we don't cut out that data and we expand this a little bit, we actually have quite some time where Ethereum could be ranging in here and coming back down to test this support region, maybe coming back down to around 1200, 1205, testing some of this prior support, some of this support over here. Right. And that's actually the point at which, if you're looking to get long on a pattern such as this on this ascending triangle, that would be our entry point. So let's actually set up a little trade here. We'd be looking for an entry point around this horizontal support. Right. We keep a very tight invalidation range. It's very tempting to keep it below these wicks over here, but understand that the idea here is that we actually we don't need to do that. We don't need to do that. We can keep it just outside of the trend line moving upwards. Right, tight invalidation range. Get better risk reward by keeping a tighter stop loss here. Right, and then just to the top of our pattern here, that's 2.66 to 1 risk to reward. We could tighten up this stop loss even more to get more, even better than that, and even adjust our entry point a little bit. And we will in just a moment. Let's actually take a look at some of our short and long margin pressure levels to see if we have anything particular. Okay, so this could give us a decent target of 1260, right? And that's already going to give us 6.4 to 1 risk to reward if we can realize that, and our pattern is successful here. Right, so our resistance is 1260. That's our forex short margin pressure level, and then maybe we could hunt for a little bit of a entry point margin pressure level off of this low. Now it's going to give us additional resistance at 1342. We've been watching that quite a bit. 1288. Let's move these down a notch to maybe our low here. That doesn't necessarily put anything on the map for us. Yeah, this one's pretty decent, 1200. Right, so off of this most recent swing low, and if we even move it up a little bit, we actually get what would appear to be a pretty decent support level in this 6x long level that's actually been holding. So this is the level that we'd want to buy. 1207, and it's not a big margin pressure level. It's not one that's I'd bet the farm on, but with the confluence of our pattern and the fact that we've actually been finding support on this level within this pattern, I do think that would be a really solid entry point. So for ETH here, we're going to say 1207.58, right? And with a 0.67% stop loss here, you could actually use pretty high leverage here if you were wanting to manage your stop loss in that manner. So let's go to ETH long 1207 point. Let's call it 120. Let's call it 1208. Take profit is 1260. Obviously, we want to be moving up our stop loss as this bounces. If it does, move up our stop losses outside of our invalidation trend line here, and continue to move that up just in case we don't make it all the way up to 1260. Our stop loss is going to be 11.99. 11.99. I actually really like that trade, even though it's just a 6x long margin pressure level. We just saw the QNT ascending triangle break out, so we're getting pretty decent signals here for a long on ETH. ETH is like a stable coin right now. Yeah, ETH and Bitcoin both holding these levels here. 1190 is actually really, Ethereum performing pretty decently, because 1190 is really the level that you would expect to kind of be pulling Ethereum back down. And we've seen this, this level hold multiple times, right? We would go all the way back over here too. 1190 is really the big level, and we took one little plunge below it, and it would have been a good level to actually buy. We didn't quite make it last crash, and obviously we had our resistance here that we were able to pump through pretty hard after some consolidation. So I actually wouldn't be surprised if we saw something like this again, right? Boom, back down, right? Look for an entry right around there, 1208 or so. Yeah. Volatility very low over the holidays, which is very interesting. Normally crypto over the holidays is kind of, at least in a bull market, you get a lot of volatility, or a decent amount of volatility. Let's actually take a peek at our volume for ETH on the daily. Yeah, just been dwindling off. Now, a lot of times volume can dwindle quite a bit before a larger move, so be on the lookout. A lot of times low volume is a bearish sign, but it doesn't necessarily mean that we're just going to fall off a cliff. It doesn't necessarily have to be bearish, especially if the patterns are bullish. Now, if we fail to break out above this level, or what we could very reasonably do is we go up to 1260, right, which is our target, and get rejected. We go up to 1260 and get rejected, then we could be in a more bearish scenario. What does it mean for Solana now the blue chip NFTs are moving to ETH? Will it affect Arweave too? So that's a good question. I actually think Arweave is going to fare better off than Solana actually will, because I believe Arweave does have an integration with Polygon, if I am not mistaken, or at least with Meta, and I'm still I've been working on the rebrand and the site and everything, but still working on doing some research on Arweave. I would like to get that done very quickly. Price has not fared super well, getting a little bounce off of 616. From a strict technical analysis perspective, we've talked about how anywhere under $7 does appear to be a pretty decent accumulation level for Arweave. Again, strictly technical analysis based. We're falling below these previous support levels. So we're actually, for Arweave, sitting at these all-time lows, right? And it's still a very solid project it's just fared poorly because of the demise of Solana, but that doesn't necessarily mean that it's not going to be adopted in the future, right? So that's actually a pretty decent catalyst that's pushed Arweave's price down to levels that we could accumulate for the long term. And again, I'm not pulling the trigger on any Arweave yet. I am going to be, waiting for to do a little bit more research. Hopefully be able to get that out this week. All right. So Solana, I'd actually be quite surprised if we didn't see a bounce here. If, just a little bit of a bounce, at least back up to our green easy band levels. I'll touch on the Solana NFTs in just a moment. But usually you get a big capitulation wick, and then you come back to revisit it, you get a bounce up. And it doesn't mean you can't fall back through it and go lower. I do think with NFTs leaving Solana, big NFT projects, that's pretty bearish for Sol. Do I think that Solana is dead completely and is never going to be built on again in the future, and the bull market's not going to bring it back? I don't think it's dead in the long term. I think it's still solid technology. I think that, the unfortunate thing is that the, tokens were distributed distributed in a way that was very beneficial to VCs, and VCs made a lot of money off of this. Some VCs probably lost a lot. Well, no, I'm not even going to say that, because Solana's still well above where any VCs got in. So they lost from the all-time highs if they didn't sell, but that's not the same as losing. Excuse me. No. I don't think Solana's dead long term, but now that DeGods and Utes are leaving Solana, and a lot of other NFT projects are going to follow suit, I actually think that was the one redeeming quality of Solana, is the presence of a really strong Christmas mood. What is this? I don't know what that is. This is a little option here for I have no idea what that does. TradingView has a Christmas mode or a Christmas mood. No, that was the one redeeming quality of Solana, was that you had a really rich and vibrant NFT ecosystem led by DeGods and Utes and D Labs. And now that they're leaving, I actually think this is quite bearish for Solana, quite bearish. So had they not left, I would have actually, expected Solana to have the ability to bounce back. And we actually talked about this at $19.40 is our key level. I'll actually put the margin pressure levels on in just a moment to show you that level right there, 1940. Right, this was the bounce back that I was anticipating had this not happened. Now, if you are in the what was formerly known as the Crypto Stackers Pro Smart Money Discord, it is now the Sistine Research Discord, which all of those that can all be now found at sistine.ai. Sistine.ai. I actually do not have a link to this in the description below. I'll put that in the chat. That is the new website link, just because the rebranding was done today. I'll make sure to get those links updated soon. If you're in the Discord, you know that I put in my analysis section that I believe that it was a good idea to move into these NFT projects if you still wanted the upside exposure to Solana, right? If Solana recovered, but you didn't want the downside exposure to Solana directly. I personally bought a bunch of DeGods, and I say a bunch, might be a bunch for some people, isn't necessarily a bunch for other people, but I moved my Solana position personally into DeGods, and that has paid off really, really nicely. Let's go to Soul Sniper here to DeGods. DeGods has been moving up at a rate that has more than offset the downwards pressure in Solana. So sitting here at 516 Solana, and at the peak of capitulation, you could have caught this wick for as low as 117. Now, keep in mind, I don't believe a lot were sold down there. I think the bulk of them were sold on the FTX capitulation around 200 Solana. So this has been a really nice, 170% run in Solana floor price. Which is, these are now currently holding their value around above $5,000 now, around 50. If Solana is what, 1131, now these are around $5,500 to $5,700 floor price. I made sure to pick up quite a few, just moving my Solana position over into these, predicting that, hey, this is the exact scenario that plays out, or that we would that we made this move to hedge because of, right? You have the optionality. DeGods and Utes had the optionality to abandon Solana if they felt like it was a sinking ship. So again, if this, it has been a sinking ship, and if it continues to be a sinking ship, DeGods and Utes have had the opportunity to say, all right, this is a sinking ship. I'm going to get off board. We're going to go tether ourselves to some ships that are faring in milder seas, if you will, if we keep the analogy going, which would be Matic and Ethereum, which honestly, they picked the two chains that I like the most, Matic and Ethereum, right? Matic technically the best? Is it the most decentralized? Is it the absolute greatest thing ever? No, but they have partnerships, And for the sake of Utes, which is their other collection, we'll go over here and take a peek at the Utes floor, which I haven't been watching nearly as much. But for the sake of Utes, they actually have the potential here. Oh, you could have picked some up the other night for as low as 120, 130, sitting at 158 right now. For Utes, they have the opportunity here to potentially get plugged into Polygon's ecosystem and their partners and maybe do some really big partnerships, right? We know that Polygon crushes partnerships. They crush partnerships, okay? So Polygon wants a rich and vibrant ecosystem. They probably paid for D Labs to move Utes over to Solana's ecosystem. Right, I'm almost positive they paid. I don't know how much they paid, but I'd be almost. I can almost guarantee you they moved that D Labs didn't move them over for free. But let's just say they got a partnership with Nike or Adidas or I don't know what. But they have these staking mechanisms where you can earn points and you could potentially spend those points at various partnerships. Maybe it'll be Nike, maybe it'll be Adidas. I don't know. But the point here is that it's in Polygon's best interest now to really, really throw their weight behind Utes as an NFT project to really spur on the NFT market on Polygon and get adoption. So I think it's bullish. And then you've got DeGods, right? You've got DeGods that are now moving into a far more liquid space. DeGods are frequently the #1 NFT project by trade volume, above CryptoPunks, above Bored Apes, above Other Deeds, above Mutant Ape. They've taken the top spot in trade volume multiple times. Not for a long period of time, but for a brief period of time. Now that's on Solana, where 80% of the NFT volume has been DeGods and Utes. So they're moving into, Solana as a chain has been capping has really, really been capping their growth. And now that DeGods are moving to Ethereum, I think it's a slam dunk play personally, not financial advice, but I added on the announcement, I added to my DeGods position yesterday. Potentially would be looking to add a little bit more. Sorry if I was talking really loudly there. My dog Louie came downstairs and he's like scratching at the carpet trying to make a bed for himself. All right. If Louie comes over here, maybe you guys he can make an appearance like he did a week or two ago. People said they wanted to see more of Louie. Galen's sleeping upstairs, probably passed out. All right, looks we're actually catching a bit here. Yes, we'll take a peek at Aave with the easy bands. Let me get off the short levels. Aave here. All right, getting a little bit of a kick up off of our green easy band level. So this is acting as soft support, like we would kind of expect here. I was actually really, really excited about Aave for a brief moment in time when I read about their stablecoin GHO launching. However, I was unable to confirm whether or not whether or not the GHO revenue proceeds go to Aave stakers. I don't believe they do. If they did, that would be extraordinarily bullish for Aave, and I would be taking a decently sized position based on that. But I was unable to confirm that, as that I believe would make Aave a security. So that's a bummer, but doesn't necessarily mean there aren't other opportunities in the space. Let's take a peek at oil. It looks like the oil market's opened up, or am I wrong? Is the oil? Yeah, it looks like the oil market's open. Yeah. I thought I saw the ticker moving a little bit. Maybe it's not. I know markets are, yeah, there it is. It ticked. I know a lot of the markets were closed today, as for Christmas, the day after Christmas or whatever, national holiday. Oil spiking back up to $80. It is a good feeling to be hedged in oil right now. I know we talk mostly about crypto here, but getting another kick up off of the downtrend line. Look, I've read very bullish things on oil. I've read very bearish things on oil. Oil's, can be tough to predict the price on. Obviously, you've got China reopening, putting more demand on oil, putting out more demand for oil, which should kick up the price a little bit. And you also have the strategic petroleum reserve, which we drained to get the price down here in the first place. We're not draining that anymore. In fact, we're going to have to be refilling it. But I have read some individual reports on oil that actually paint a more bearish picture for oil, that it could actually continue to fall. So we'll see. Even if it just kind of underperforms a little bit or moves sideways in 2023, I do think that it is good to have in one's portfolio as a potential hedge against one of these happening again, right? That's disastrous. That's where you really, really want to have oil in your portfolio to take some profits at the red easy band levels, right? You want to take profits up here at 120 a barrel, right? And have that ready to roll into other investments, right? As they plummet, right? Whether it's the S&P 500, equities, gold, stocks, whatever, bonds, whatever you may be looking to pick up cheaply. But you really want to, because when this is happening, everything else is, going to be tanking afterwards, right? Like we've seen so far, or tanking, amidst this. If oil prices spike up again, expect the S&P 500 to not be performing well. Speaking of S&P 500, let's take a brief glance at our price action from last Friday, was it, when we closed up on the day, 0.59%. I believe we open back up tomorrow morning at 9:30 Eastern time. So our base case was actually realized. It was realized in the futures market for the S&P 500. So it hit overnight, like outside of normal trading hours, retested our 3,900 and change level, our 21-week simple moving average. That was our base case. And we said once that happens, right, we could fall back into either direction. But we really felt strongly like we were going to get a retest of this level. So it'll be interesting to see how markets open up tomorrow. See if we can get a retest on the actual, right, a real retest of the 21-week simple moving average of our S&P 500. Maybe reclaim it. A reclaim would be great. A failure would obviously be bearish. But we can see that the S&P 500 is fighting to normalize back to these levels, right? Back to this 21-week simple moving average, whereas before we were pretty clearly in a downtrend. And I'm not saying we're not in a downtrend any longer. We've yet to break that downtrend level, but we have certainly spent a much larger amount of time up towards closer to the 21-week simple moving average and our downtrend level, to a degree where we'd actually expect maybe a couple more retests and a couple more opportunities to break this downtrend. We've also seen the Dow Jones, right, which is not weighted down by these really poor performing tech stocks. We've seen the Dow Jones poking its head out above its downtrend line, looking for a strong reversal here. Now, this was a monstrous move, so I personally would not be too surprised if we saw a trickle down at least to the 21-week simple moving average here, a little bit of a more of a pullback. But we did find that strong support on the 21-week simple moving average. Got a really strong impulse upwards. So we do have that as a level of support if we were to fall back down. So things to keep an eye on here. Again, the picture is not, in my opinion, is not necessarily as bearish as people like to make it out to be. It is bearish. I do expect that 2023 recession, probably sometime, mid 2023. These things are very difficult to time, very difficult to predict. But I don't necessarily think that you should be buying put options for next week and just, rolling them forwards at any given time. It's like, that's going to be a very expensive strategy to predict a collapse in the market that may may not come for another 6 to 9 months or even maybe a year. Governments and central banks love to kick the can down the road when they can. And that's what I would expect them to attempt to do here. So yeah, we can take a peek at Apple. And it'll be really, really interesting. I mean, the market could open up super low tomorrow and start spilling off downwards. Maybe we could get some boring lack of volatility. We'll see. I'm not aware of anything that has happened over the weekend and today that would indicate a major spill off. Now, tech stocks I do think are probably the most vulnerable. Apple being potentially one of them. Tesla. Obviously performing horribly. We'll see. I know, when you look at Apple's balance sheet, I believe it still looks really, really solid, but I've seen some analysis, however, right, that might suggest that on a longer term time frame from a TA perspective, Apple just looks really, really overextended and ready to kind of fall back down to test some of these lower levels. Again, like, fear mongers love to really, use charts to their advantage and say, hey, things look really, really rough. And just like you could get the people that are going to say, 300K, 400K, 500K Bitcoin, right? They're going to use those charts. They're going to say, they're going to do something like this and say, well, Apple could technically reach $400, $431 by May, and we know that's incredibly unlikely. It would have to happen, but they'll do some technical analysis gymnastics to show that's what they expect. Apple actually here on kind of what we'll call dual support here. I actually don't hate an Apple buy here. And again, and this is why I don't do stocks, because I don't read balance sheets. I don't do the fundamental analysis or equity analysis on stuff like Apple. And obviously, like, it gets very, very complicated, right? Because you can do you can look at their balance sheet, the health of their company, projections and stuff like that. But then it's also like, you got to take into account the COVID situation in China and them reopening, and Apple moving their factories to different countries and out of China, and the effect that could have on the business. Those things are very, very hard to quantify. And that's one of the reasons that I personally don't do stocks. I just feel like it's far more competitive, and you're playing a more difficult game. Obviously, technical analysis can still work with stocks as well. So, TA is still very, very valid. We're just not capturing, necessarily the, what's going on in China or, the state of their balance sheet on this. But I'm a fan of buying trendline support, at least for the short term here, catching a little bit of a bounce. In fact, I'd be surprised if we just plummeted through this. And even if we did plummet through this, I would certainly expect a retest on the backside, right? And an opportunity to de-risk and get out at the same price you're buying at. We're just at a very key juncture of like structural. This is strictly structural support. And I know we're on a logarithmic view, but this is just very strictly structural support. We've seen support in this region before. We've now dipped below this kind of support level up here at 135. We're sitting at 132, kind of sweeping these lows, maybe taking out some liquidity. But overall, we're sitting on a pretty long-term trajectory trend line. And usually structural support, it may not be good enough for trend continuation, but usually it's good enough for a little bit of a bounce. So we can also throw on our easy bands. We see Apple, it's a stock. It's going to be far less volatile. It's not going to be reaching we need to recalibrate these for a less volatile stock. It's not going to be reaching this green easy band, hopefully, right? It is actually within the realm of possibility that Apple could tank down to our green easy band of $100, but it's not hit the green easy band on too many occasions. And I guess when it has, it's been a really good buying opportunity. So they're, in an absolute chaos.com bubble right? You were kind of, you're still buying a little bit early there, which is not ideal, but buying below it, absolutely, right? And then all of these other touches really, really paid off to be buying. So maybe the easy bands do give us a pretty decent signal after all. So maybe if you're looking for a longer term move in Apple, follow the easy bands because historically they have been more accurate, $75 to $100. But as far as just a short-term trade here, I wouldn't bet against a bounce in the next day or two. Sitting at 132 as our forex short margin pressure level from our last swing high. So we definitely have some shorts that are going to be wanting to leave the market here, maybe contributing to that bounce upwards. And yeah, that's not been as strong of one for this local high, but this one's far more recent. And let's get our long margin pressure levels in here. Yeah, so that would give us some support around 106, right? Which would be this last kind of impulse move right there. So if I was targeting a more, maybe a longer term move, what I would want to see is a fall, down to this green easy band level, and then a move back above it, and then support at 106. So I wouldn't necessarily want to blindly buy $100 Apple. I'm not against that. Probabilistically from, historical analysis, that's been a really good bet for Apple. But again, Apple's a much different company now than it was back in 2008. Much different company now than it was back in 2000. Much different economic circumstances. For the record, I don't think that we're going to have this happen. I personally, it's ugly. It's ugly, but the .com bubble came after unprecedented speculation in the markets. And I don't believe we've had that speculation. We've had a bull market. We've had a bull market prompted by expansionary policy, but the speculation and multiples, value multiples aren't as high as they were in the .com bubble, and it's not been as bad. So I don't think we're going to get that. Of course, anything's on the table, but I'm spending a lot of time on Apple here. Let's put in our key levels at least. 132, 106, and 100. That would actually be 99.50. We'll call it like 99, because by the time this drops down there, it could be well below 99. Yes, the channel name changed. We are Sistine Research now. All right, looks like QNT holding up decently. This morning I was taking a peek at Nano, just was not able to get any follow through on this Litecoin pump. Looks like we got stopped. We'll do our margin pressure levels here. Drag those all the way over. And let's zoom back out to the weekly, unfortunately. Get these easy bands off and move these over. All right, we should be good now. Should be good. Litecoin was getting stopped here at our 7140 resistance level. Decent little level to maybe look for a short at. That's pretty hefty resistance. It's a resistance level that we've seen hold in the past. I'll get rid of the short levels to make this a little bit more clear. But we've seen it hold here as resistance. We've seen it hold here as support. We fell through it. We're now retesting it from the bottom side. And so far, we've caught resistance. Now, we have put in a really solid little back-to-back day pump here, following in the footsteps of QNT. So what we're seeing in the market here is some of these bear market performers are actually wanting to kind of break out again. Or at least they're trying to pull ahead of the market. Litecoin performing well, QNT performing well. Let's take a brief peek at XMR. XMR got a little bit of a move. That's one I've had my eye on just a little bit. So we're starting to get this pullback here. The question is, how far of a pullback are we going to get before either going up and breaking through it or potentially breaking back downwards? So this is not the worst place in the world to have just shorted. You're in profit right now. You could sneak that stop loss into profit, probably get stopped out. But in case you don't, right, you're just kind of free rolling that strong resistance level. But what's interesting here is I've been tracking Litecoin dominance versus Nano dominance, and this is Nano. Go Nano dominance, and this up here is Litecoin dominance, and these are two very correlated assets. Obviously, Nano being much lower cap, much more subject to these very large pumps, right, which we can take advantage of. So Nano here, usually when these two diverge, right, you start seeing Nano dominance going downwards while Litecoin dominance is going upwards. Oftentimes that leads to a little bit of a catch-up trade here in Nano, and obviously this pump was very large, but we're again seeing Nano dominance going down while Litecoin dominance is going up. Now keep in mind, if we look at this point of divergence where Litecoin really started making a move here before the Nano pump, it was like 21 days. So if we measure it from where Litecoin really started moving up again, we're about 8 days into this trend. We could definitely see this take another 2 to 3 weeks to actually play out. But I do think that the catch-up trade for Nano's, potentially a decent trade here, and one that I've had success with in the past. So, right, even in this bear market, again, we see, we see this divergence happening, even with Litecoin not necessarily pumping huge, right? We're just getting that divergence where Litecoin's eating up some market dominance, Litecoin's performing well against the rest of the market, and Nano drifting offwards. There's a little bit of a catch up, right? And then it falls back down. There we go. Maybe find a couple other examples, but you kind of get the picture here. Obviously going back to the bull market, we saw stellar performance out of Nano here, but was oftentimes led into by this Litecoin pump. That Litecoin pump, right? Nano falls down, boom, and then it just explodes. So definitely one to keep an eye on. Was watching it this morning, entered a little trade, ended up getting stopped out at slight profit. But otherwise, just keeping an eye. If we see this continuation in Litecoin moving upwards, Nano continuing to move downwards, look for that catch-up trade. Right. Any thoughts on futures expirations, Max Payne? I think I don't have a good resource off the top of my head as to where to track that. Deribit, maybe futures, Max Payne, insights. Let's see. I think this is just a stagnant page. Sometimes I see it drift out on Twitter. I don't necessarily subscribe to Max Payne theory. Maybe it's a little more relevant in a bull market than in a bear market, but I believe Max Payne for Ethereum options is around like 14 or 1500. Let's see here. See if we can find anything. ETH options, Max Payne. Max Payne. ETH. Okay, this was from 11 hours ago. I don't know if I necessarily trust this source, but it's in line with something else I've seen, which is $1,400 for ETH, which, that would be a nice little pump from where we're at right now. And Bitcoin would be 18.5K. And what is that for? What for Elon? Yeah, I've never really subscribed to the belief that Max Payne, and maybe I'm just missing something a little bit, as far as, why so many people believe that the options are going to expire at the max pain, or the price is going to seek the max pain point. I'm a much bigger believer in simply supply and demand. I think the biggest variable on price is supply and demand, as well as which is often dictated by these inflection points of leverage trading in the market. So those two things, I think, have a much larger effect on the market than necessarily options positioning. Do I think it's a good time to start accumulating nano? If you don't have any and you buy into the thesis, which is a high risk, high reward thesis, and honestly, at this point, nano's fairly. I'll go ahead and I want to be careful using the term low risk, but we are at like pre bull market levels. We've come back to these pre bull market levels, so I have a much easier time saying like, hey, chances are next bull market you're going to get a really big opportunity to just sell a pump, right? We recently got a pump up to $1, and I think on most exchanges all the way up towards like $2 or $1.70, right? Buying right now, there's a very strong chance you'll get an exit pump at some point in the future, even if nano does not succeed. But if you assign anything above like a 3 to 5% chance of success and adoption for nano, then it becomes like very asymmetric risk to reward, and it becomes very worthwhile to have a small bag in your back pocket. As far as timing goes for accumulations of low caps, I actually think we're a little bit, we're still further away than where I'd like to be if we go out to Bitcoin. I think what's going to catalyze some adoption in the market, unless we get a surprise catalyst like, a country adopting crypto that we didn't see coming, or, a lot of demand coming in for Bitcoin or Ethereum from a source that we just didn't expect to see it from. It'll probably be coming back in the Bitcoin halving of March 2024, or preceding this rather. So if we go to May of 2020, right, and obviously we have to eliminate our let's go out to the weekly. We do have to eliminate this COVID, crash, because that was obviously unplanned for, but this is all good data before that black swan event came in out of nowhere. But this is really where we actually started seeing some accumulation. If we go out to here, we were, that's 180 days is 6 months. So 180 days. Yeah, we were just kind of starting 6 months out of this Bitcoin halving. We had our bear market rally, we had our pullback, and we were starting to accumulate and break back upwards. And then we got this COVID crash that was just a blip in the data, really. Blip in the data, we started printing. We would have gone into this bull market regardless. I think we would have just taken a straighter path there had we, and maybe even gone higher had we not had COVID. But that also led to a lot of stimulus printing. So really, we were about 6 months outside of this Bitcoin halving before we started to see that. So if we trace back from our March 2024 date, when is the market really going to start being comfortable buying some crypto, speculating on Bitcoin again? You guys know I'm not the biggest fan of Bitcoin, but most of the world still buys into the Bitcoin thesis here. And we've now had this bull market halving cycle every 4 years. There's going to be people buying crypto and getting ready for the next halving. And I think that's going to occur more than likely around 6 months prior, give or take a few months, right? 6 months prior, we're going to start to see the demand, right? If we were just to draw a chart here, right? A little chart, and this is demand. We're going to start to see demand really start to increase, right, as we get closer into the halving. Okay, and I think that demand is really going to start hitting an inflection point where it can actually affect the price of Bitcoin. Roughly, maybe 6 months, maybe it'll take until 4 or 5 months this time, but maybe it'll be 7 or 8, depending on macro conditions, but in this kind of range here, right? So we're still, as far as actually jumping into and accumulating some altcoins, I do think we're in a position, again, this has been my thesis over and over, and that I've reiterated. I do assign some potential upside, some potential for upside, and maybe even a bear market rally and a catch-up trade out of crypto, right? You see quite a lot of correlation between the S&P 500 and the Dow Jones and Bitcoin. And we've actually recently broken that correlation where the Dow Jones is pumping basically, and Bitcoin has dumped because of FTX, right? And in fact, if we were to overlap, let's compare. Let's throw on Dow Jones. Let's go to new price scale, Dow Jones here, and we'll make this a different color because I associate orange with Bitcoin usually. So we'll make the Dow Jones this color, right? And this is this very similar concept to what we were actually talking about with Nano and Litecoin. We see, right, the correlation between these two assets, quite frequently. I mean, look at, even despite the black swan events that we've had, we look at the Dow Jones, and a lot of people like to look at the S&P 500. I'm just looking at the Dow Jones because it's a more extreme example right now and how much it's actually pumped, right? We actually saw quite a lot of correlation here with the Dow Jones, even on some of these retracements in Bitcoin here, retracement, right? And then a fall down, right? And more recently, the Dow Jones bounced back harder than Bitcoin bounced back, and it took another spill back down a little bit harder. But most recently, it's gone up, and with FTX, right, Bitcoin's fallen down. So we're getting this divergence here between the overall non-crypto market and the crypto market, right? So there's this idea here that we could get a catch-up trade out of Bitcoin. We could go back up and test these, even just this coming back and recovering our range, right? A lot of times you'll see that pattern. You get a big dump and then there's just consolidation, and then you run it back. We don't have to look so far back for Bitcoin to see that pattern emerge, right? We actually saw it. We had this big dump, right? Consolidation sideways, and it ran it back, almost all the way back up before the first correction, but really back to the top of this range, right? You frequently see that. So I don't discount the theory that we could actually have a bear market rally. And if we look at last market cycle, which does not dictate this market cycle by any means, but we did see a really strong bear market rally, and we have had a very significant decrease and drop in crypto this bear market. But yeah, you don't really have to look far to see that pattern where you get the large capitulation, the accumulation, and the explosion back up. You see it over and over and over again. You also see it on the other side. You get this pump upwards, right? Distribution, and run it back down, right? So I actually think that that's a fairly likely scenario, and I'm a little bit bearish on Bitcoin overall because of how much miners are having to sell. But we'll see if some demand can be sparked back in if the Dow Jones, right, which we know is now potentially making this bullish bump and run pattern, can get a bid back up to all-time highs. I know that sounds crazy, but we're only like 10% off all-time highs or something on the Dow Jones. I don't know exactly what it is, but I'll tell you in a second. We are 11.33% off of all-time highs. So I know the market looks bleak, but 11% is not a lot to pump or to move before maybe getting a recession in 2023. So I know everyone's max bearish, and you start talking about all-time highs in the Dow Jones, and people start freaking out. But it's like I was talking about bottom in the S&P 500 when that happened, and people were like, "No, that's not the bullish divergence doesn't matter." Well, it kind of does, and it played out significantly well for the Dow Jones and for the S&P 500. So we'll see. You guys know me. I'm more, I'm very wishy-washy right now. I'm more than happy to take a hard stance on certain things and a hard stance directionally when I feel like I have an edge in the market and I feel like I have a feeling some analysis that points me in one direction or the other. And I did take a hard stance on the S&P 500 and the overall market catching a bounce here, but particularly this being a local bottom. I took a hard stance on Bitcoin. This being a local bottom for Bitcoin. When I feel very sure about something, I don't mind taking a harder stance. But right now, I'm very wishy-washy. I do think the market can move in either direction, and I just happen to assign. I'm 50-50 when a lot of people are like 90-10. They're like 90% downside, or 100% downside, and maybe slight chance that this holds on a little bit longer. Whereas I'm a little bit more 50-50. Why the word Sistine for? So Sistine, like the Sistine Chapel, holds master pieces of art within it. The Sistine ceiling was painted by Michelangelo, if I'm not mistaken, and hope to produce some masterpieces of research. Sistine research. All right. So I see another question about Nano, but we just covered Nano, so we're gonna actually let me put in my levels for Litecoin before we move off of Litecoin, and then we'll probably wrap it up. I do want to show you guys the new Sistine website, the new website and the new product offerings. All right, so 71 to 71.40. 71.40. And we have $85 even as our resistance level. Oh, I'm sorry. I believe it's 85. We got to make sure that's not just our local high. Yeah, let's be a little bit more careful there. We've established a new local low, so 81 and then 91. So we've got, let's do 81.39 and 91.56 as our next two big resistance levels. All right, so if we go over to Sistine Research, and I know that's blinding you guys, but I do like the white background. It's a little bit more professional. Yes, it's bad when it's at nighttime, but we'll see if I can add a dark mode or something. There's also plugins that you can use. All right, so we have three different product offerings. So the mastermind group is now known as the professional group. So you get access to everything, including the professional Discord group where we meet once per week to discuss the market and opportunities within the market. Then you've got the Research Hub Plus. I'll probably just change that to the Research Hub. So that'll get you access to the Discord group, as well as the Research Hub, as well as the TradingView indicators, right? So if you're wanting these indicators, not only do you get the indicators when you buy the Research Hub, you also get access to the Research Hub. So that is a bonus for getting the subscription to the Research Hub. So that is the margin pressure levels, the short and long margin pressure levels, the easy bands, as well as the risk reward levels and high-low scalping tool. Right. And then, of course, I'll go over the Research Hub in just a moment. It's going to have a lot of stuff here. And then, of course, the Discord group. The base level Discord group is $9 a month to join. It is the best way, in my opinion, to access critical information faster. I can't tell you how many times I catch stuff and then I I see it in the Discord and then I go down a little rabbit hole and it leads to me making money. Now that doesn't necessarily mean that you're gonna join the Discord group and start printing money, but it is a great resource, great community, great technical analysis, great place to be paying attention to and paying attention to the crypto market so that you can take advantage of opportunities when they pop up. And it is a bear market, but these opportunities are popping up like crazy right now. Have had some really, really solid wins booked in the last 2 months. And the last 2 months have been brutally bearish. Okay, Research Hub. All right. So I'm not going to show this very frequently, but I do want to give people an idea of what it looks like. And for anybody who's already a lifetime subscriber, you'll have a promo code emailed to you if you do want to subscribe to this new product. Of course, you won't lose access to anything. You'll still get access to the old dashboard. If you signed up on the old dashboard, and you still get access to the Discord as well. But we have plays, principles, and reports, or research reports. So 3 different sections here. So plays are kind of the short-term things that we're looking at. If I were to click into these, it would show some a more detailed analysis of a certain play that we're looking at. Again, I'm not going to make it a habit out of showing these on live stream, just because as this grows, these are going to be there's going to be a lot of alpha here in just the titles and paying attention to what we're looking at. So these are going to be basically little 1-pagers of alpha. Sometimes they'll just be 1 to 2 paragraphs. Sometimes they'll be, a page or 2 of what I'm paying attention to and what we're paying attention to in the crypto space. And these are really good opportunities to make money if these scenarios unravel. Then we've got principles. So rather than just creating a course that is just like a one-time, you go through it one time and you kind of leave it. No, I want to make something that's more dynamic and more of a repository. So pumping out some really good principles. Principles are underlying concepts and frameworks that can be used to guide analysis and decision making. So it's like you see an opportunity in the market, or you see a big catalyst occur, or you see something pop up, a project. How do you actually go about understanding whether or not that's a project worth investing in? Well, you can reference these frameworks. So we're going to be talking, I'm going to be putting one out on microecon, supply and demand, macroecon, niche specialization. There's going to be one on NFTs. I actually haven't put that placeholder in right now. So none of these are written yet, but I'm going to be knocking these out in the next couple of weeks and even this week. Looking at, how do we evaluate NFT projects, right? You'll be able to go to a principle and say, and if we don't have a principle, lesson or whatever you want to call them, there'll be a page or 2. If we don't have a principle that helps you make a better decision regarding a particular investment, it does not necessarily mean that's going to make it a winning investment or a winning decision. There's certainly outliers that don't follow the principles, but if we can have a principle and a framework for evaluating NFT projects, and you have that as a resource, and then you see an NFT project, you can kind of put it through the framework, put it through the principle, and make a more educated decision based off of that. So that's what I'm very, very excited for this section, and actually very excited to write out a lot of these sections. And then research reports. So, I've got 3 or 4 in the pipeline that I really want to knock out, but these are going to be more in-depth, specific topic based, a little bit more dense, but hopefully good reads nonetheless. And I'm excited for those as well. So that is the new structure. This is the research hub. Very, very excited for this moving forward. The website is live if anybody would like to join. If you are a lifetime stacker, like I said, you'll be getting a promo code, so you don't have to pay for the $49 a month, since you've already paid for the Discord group and the dashboard indicators. So yeah, very, very excited. Let me know what you guys think, and would love to see you in the Discord group. Let me catch up with the chat one last time, see if there's any other questions. Feeling the new name. Can I look at levels for Arweave? So we already took a peek at Arweave at the beginning of the stream. Basically, technically, anything under $7 looks pretty decent. It feels like this is, and I need to do a little bit more research, and I keep saying that. But let's throw these on. Easy bands, right, all the way down to $5.16. This seems like a very strong buying opportunity for Arweave. And again, it may be a little bit premature in this bear market, but you never know if there's going to be a little bit of a bear market rally. But what's suppressing Arweave's price is largely Solana pretty much collapsing due to FTX fallout. and NFT projects basically fleeing Solana. So Solana TVL has dried up pretty much completely, and they were, one of the larger users of Arweave. But I believe Polygon, which is really healthy and growing right now and looking very good, in the place where a lot of these NFT projects are moving, I believe they use Arweave as well. So all right. Awesome. Thanks so much for everybody for tuning in. We'll be back at it 10 p.m. Every night, 10 p.m. Eastern time. Hope to see you in the Discord. Thanks so much for tuning in. Very excited for the future of cysteine research, and thank you to everybody who has been along for the ride. Thank you for everybody who is just now joining. Look at that QNT price popping up a little bit, pushing through resistance. Very, very nice. All right, with that, we'll sign off. Thanks so much for tuning in. Peace.